Today, folks, there is one defining factor that will tell us if the Canadian stock market has truly bottomed and if these decade-high yields are truly a buying opportunity of a lifetime or just a dividend yield trap where we might experience cuts if this one aspect of the market completely collapses, and that, of course, is real estate. We're going to discuss that. We're going to get into the deal going on with Royal Bank and HSBC that could really be a buying opportunity of a lifetime, but now is getting politically charged and may even be blocked. And then we're going to talk about earnings, because earnings seasons is here, baby, and that's going to tell us our default rates increasing in the mortgage market as these banks give us that data. We're going to see the big tech companies post in the US, and there's a lot of parities between what happens in the US and Canada, so we'll see how those earnings persist. But if that is a conversation you'd appreciate, as always, damn it, hit that like button, because people on TikTok have been running rampant lately, just beating up what is going on in the Canadian economy. They make it out like Canada's a garbage place to live, and I'm here to tell you, hey, if you don't live in Vancouver or Toronto, you can't afford those cities, there are affordable places to live in Canada. And Canada is by far one of the greatest countries on the freaking planet. Not only do we have free health care, we have guns. I mean, people in Canada have guns, and we ain't shooting up schools with them. We have gay rights, abortion rights. In the MJ markets, our drug markets are so progressive. Everything's almost legal at this point. Like, there's a reason people are flooding here in droves, but everybody on TikTok's going to be quoting these articles that came out in the summer. We're going to focus on the real estate side, saying the days of Canada having a reputation of conservative bank practices are coming to an end, baby. In new research note from the IMF, the Global Financial Agency ranked mortgage default risks for households. Canada's combination of high household debt, frothy home prices, and floating rate loans make it the riskiest advanced economy in the world. And yes, this is going to be a topic of choice probably on this channel for the next 6 months until we can get through the eye of the storm and people can survive this high interest rate environment. Because if real estate does collapse, that is when things are going to get absolutely demonic here, because unfortunately that is what most of the Canadian economy hinges on. Even these big cap companies that don't have exposure to real estate, guess what? They're going to come down if real estate comes down. And the bank stocks are the largest companies in Canada, right? But as mentioned, that's not the data we're seeing. We're not seeing a collapse. Default rates are lower than where they were during the pandemic, and house prices are holding up over $1 million a year over year. They're up 3%. Seasonally adjusted on a month over month, they were only down 0.1%. And you really need to fixate on this data, because the fact is if you can't afford your mortgage on your renewal, you have, you know, a variable rate mortgage. The fact of the matter is today, if you can't afford it, that doesn't mean the economy comes crashing down. It means you put it up for sale, and still in this market environment, there is someone there to buy it, because the supply and demand metrics are messed up and people still are coming here with a lot of money and they're still buying real estate. So for as long as that remains true and we can survive the higher interest rate environment, we come out on the other side without a massive real estate correction, the Canadian stock market is likely the biggest buying opportunity you've ever seen in your life, but this is the defining risk. Now, I also want to talk about the banks here, because Royal Bank, I think, understands that the default rates aren't going through the roof. They're trying to take advantage of the lower price market environment, and they're trying to purchase the Canadian counterpart of HSBC, which comes with like $30 billion in mortgage loans, and you got to listen to one of the up-running politicians, Polyev, running rampant his mouth here, trying to block this. Take a listen.
Only competition delivers better price and product, and only competition can allow Canadians breakthrough. I should also say, I know a lot of your listeners and readers are interested in the issue of competition. The average age of Canada's 15 biggest corporations is about 121 years. The average year in which our 15 biggest companies was founded was 1899. I think we have one company in the top 15 that was founded in this century. We have a problem where very old, very large, government-protected oligopolies have little competition and therefore little entrepreneurial incentive to become more productive and more enterprising. The only way to change that, or one of the only ways to change that, is to engender more competition in the marketplace. Competition drives us all to be better, and that's what we need in banking and in every other industry.
Now, he's not wrong, right? We know Canada's made up of monopolies, but in that state, we've actually been more sustainable than most global countries because our banking sector is more regulated because of the monopolistic behavior of these 6 major banks. Whereas in the US, even in 2022, we saw a lot of the regional banks default, right? We don't have those kind of problems, and we've been able to ride through every recession, every interest rate cycle through the 80s, the dot-com bubble, and so much more, right? And I've talked to some of the major telecom telecom giants, people that work there, and they said, hey, look, like if Bell is putting a deal out, guess what? Every other major telecom giant's going to be putting a deal out because they're price competitive, right? They want to steal those clients, and they'll cut those prices below what the other competitors offering. I mean, hell, even our internet, we've got a crazy deal here in Toronto. I mean, I'm paying like $60 a month for like a gig and a half down unlimited data, right? I mean, there's still some good pricing competition. It's just hard for newbie, companies starting up to even come close to competing because of how infrastructurally built into the economy these are. Like Royal Bank, this company gives you the largest exposure to the Canadian markets. That's why it's done so well, because Canada's economy has grown so much. Unlike TD, that does have some U.S. exposure that has also been growing well, but you got Bank of Nova Scotia that gives you some Latin America exposure. Royal Bank purchasing HSBC, it would give them such a huge loan exposure that if we ride through this economic cycle and we stay even in a higher interest rate market, let's say interest rates don't go back down to like a half a percentage point and they stay around 2 or 3%, these companies will be making more money than they ever have in their entire history, especially with a loan book that would expand by $30 billion with that HSBC purchase. So again, it makes Royal Bank look like a buying opportunity of a lifetime if that deal doesn't get barred. So you got to pay close attention to this stuff, man. There's going to be some fascinating things going on, and we just got to get through the next 6 months until we can start getting to interest rate cuts, and that'll surely stabilize the economy and bring down some of the loan risk in the Canadian real estate market. So you look at these banks, man, and that's basically the same risk across the board. So it's going to be fascinating to see what the earnings present from default rates. So consider subscribing for that. Taking a look at the Canadian economy today, banks have been balancing out a bit. The stocks that rallied last week are starting to level off, like the basic materials that were flying. All in all, though, it still looks like we're going to be petering to the downside, at least until we get into earnings, which will start coming out at the beginning of November. The big banks post toward the end of November. And in the meantime, we can only really judge what's going to happen to the Canadian economy based on U.S. earnings, because we saw the U.S. mega banks and those earnings came out much better than expected. And this week around, we're going to start seeing everything from the big tech companies, Microsoft, Alphabet tomorrow, some dividend stocks like 3M. Midweek, we got Meta posting. My God, Amazon on Thursday. This is going to be a wild ride, folks, and I hope you're sticking around for it. So consider subscribing, and I can't wait to see how this turns out. But I'll pass the question off to you. I'd love to know what you think in that comment section below.